Good morning everyone, and welcome back to this new session with a weekly analysis that we are starting from this week. So we will be replacing the daily analysis with this weekly version in which I will try to summarize a bit. Let's say what we can expect during the week. Then depending on how things develop, we might do another one in the middle of the week to take stock of the situation. Let's start with a reflection on what we experienced last week with this new, let's say, scenario of war between Iran and Israel, which obviously began by causing nervousness in the markets, also due to the sharp rise in oil prices. In short, the consequences of these attacks can certainly create some issues in the markets. However, when it comes to these issues, we also need to look at the other side of the coin. All of this started on Friday with the fear of a long weekend during which there could have been a further escalation of this conflict. Well, then some statements, both from Trump's side and so on, seem to have, let's say, put this scenario of all-out war a bit on standby, at least for now, is not quite as direct or as brutal as it could have been. In my opinion, it's like we've just kicked the can down the road a bit, postponing things until probably the Tehran regime can continue to sustain itself with exports, which for now are still holding up. That's because about 70% of Iran's gross domestic product comes from oil exports. So just imagine if the Israelis were to strike the infrastructure for oil exports, what kind of economic difficulties the entire Iranian regime could find itself in. So as long as this doesn't happen, obviously oil has seen some upward spikes, but nothing excessive. However, if this scenario were to occur and on the Iranian side there was a closure of the strait, meaning the situation escalates and ships can no longer pass through, then the price of oil would, in all likelihood, jump from current levels, which are around 73, 75, I don't remember exactly. But we'll check that precisely later could easily push oil prices well above $100, even up to $120 or $130. And just imagine how all of this could then impact the consumers in terms of inflation. And so with all the consequences that would obviously spread like wildfire across all the markets that right now are kind of, flying blind because the recovery it exists. But basically it's not excessive and it's slow. Central banks are navigating by sight. And now we also have this additional destabilizing factor that could trigger much more violent movements, precisely because of a whole series of factors that would be set off if this conflict were to, of course, escalate. Obviously, we hope that this does not happen, but according to Israel's intentions, at least based on their statements, well, I absolutely do not want to take any political stance here. I'm simply making an assessment of the statements to get an idea of what scenarios we might be facing in the market. So we need to be prepared for these possible scenarios as well. So maximum attention and caution are required. Remember that even right now, during this rollover period, the charts are a bit off, depending on whether you're looking at the continuous charts or the direct ones. Or, well, in any case, the charts are definitely a bit distorted, also because the volumes are somewhat split between the two contracts. Basically, we can say that last week ended with this sense of fear, but then with the opening of today's regular trading hours at the start of this week, the market has already more than recovered all of yesterday's negative movement. In fact, we are now in the upper part of this range that has been going on for quite some time. I'm starting to show you the chart of the DAX of the Nasdaq. Basically, we're in a trading range at the moment Right now we are operating in the upper part, and we obviously need to monitor this upper area. We have to wait because this will probably be the scenario we'll be moving in until there's more clarity regarding the situation that developed last week with the Iran-Israel conflict. Also, starting from the end of this month, we'll begin to get a clearer idea about the tariff agreements between the United States and various parties, and this will give us further elements to assess what the possible scenarios might be. From next month, of course, there will also be the quarterly earnings reports being released, and this will, as is customary, naturally mean the temporary suspension of buybacks by companies. However, I personally don't think that, given the current particular resilience and strength of the markets, especially equities in absorbing downturns and negative shocks, this will have any significant or meaningful impact on the overall movements of the stock indices. Today is already, this week is, so to speak, a short week, in the sense that Thursday is a holiday in the United States, so the service will also be inactive on Thursday. We'll be back on Friday with the proof-fetching overview, so it's an important day, the expiration of all options on an American futures, that is on the indices, all the options on American indices. And in the middle of the week, on Wednesday, we'll have the rollover for the European indices, so maximum attention for those Tradingum European futures on Wednesday. And then we have some data releases midweek. Today in particular, there aren't any especially important data releases. The first important ones will come as early as Wednesday with the Consumer Price Index, and then we'll have the Fed afterwards. But in short, there aren't any particularly important data releases except for the proof-fetching overview on Friday. As we were saying, from an operational standpoint for the Nasdaq, let's first monitor this upside area, which we can identify as 22,100 to 22,120, and on the downside, of course, we're watching 21,400 to 21,500, basically where this nice double bottom was recorded last week. So this is the area to monitor. You can place a nice horizontal line right in the middle of this range, so you also have an idea of whether we're trading in the upper or lower part of the range. But essentially that's the situation, and it's similar for the ES as well, which is currently trading in the upper part too, so it's also testing the low recorded last Wednesday. So let's monitor 80, 70, 75 and 80 on the upside. And on the downside, of course, we are watching 5,930, which is the most interesting area. As the central point of this range, we can definitely mark the 60 area, which is also a round number. So it will certainly act as a support or resistance, depending on the direction of the price. Let's also take a look at the other two American futures we follow. Let's start with the Dow Jones. A more or less similar situation, though we are working a bit more in the central part of the range. We're not yet in the upper part, so at this moment the area, the pivot of that, let's say ALL, we can identify the metal range at 42 and 5 roughly. So on the upside we go to monitor 43 and 2, on the downside 42 and 150, and centrally we have this 42 and 5 here, which I believe is basically the watershed between the upper part and the lower part of this range, which we can similarly go to work on. A similar situation obviously also on the Russell, even though it's working a bit more in the, let's say, in the lower part, basically where the price has frankly recovered its to 100 level, which was desirable. And here we can monitor 270.75 to the downside or upside. Not even this big spike at the top. We'll be monitoring more this area here between 160 and 170 for a bullish breakout, basically a continuation of the movement. The DAX, even though the German economy continues to perform poorly, well, the DAX continues even if to perform well, basically not being significantly affected, but mainly because the composition of the German future and therefore the German index is completely oriented towards export. So the local economy, let's say, matters little because in the end only 12% of the companies that make up the DAX generate their revenue in Germany. The remaining 88% make their revenue through exports. So the fact that the German economy is struggling, well, becomes marginal. It should also be said that volumes continue to be low on the DAX, and well, we are basically moving in a downward trend after having reached new all-time highs. The market, in short, has dropped it, has lost about 1,200 points from the highs, which is definitely not a small amount. These low volumes persist, not as low as they have been, but still generally low if we compare them with historical series from 1, 2, or 4 years ago. From an operational point of view, as we were saying, you can see we are in a slightly downward phase. At the moment it's moving sideways, and it could, well, if it manages to recover 23,650, I would also expect a recovery to 23,890 or 24,0. On the downside, of course, we are monitoring the lows recorded on Friday, so around 23,300, 23,300. Let's move on to OIL, of course. Let's take a look at it. Basically, well, there has been, well, this was Friday's session with everything we've already described in Friday's video analysis. At the moment, at the opening of it basically made a double top with the highs recorded on Friday, only to then drop back down and touch 77, but now it's trading around the 73 area. Let's keep an eye on this range right now. Honestly, between 70 and 77, it seems pretty clear to me, with 74, 74.3 acting as the midpoint of this range. So we could be moving within these areas, and we need to be extremely careful because news could come out that might trigger very, very sharp movements. So be extremely cautious if you're trading oil. Let's also take a look at gold. Last night it also had a strong opening. It went to break through these double tops, but then completely pulled back. It went to test the pivot we had indicated on Friday, and right now is hovering around that level. So let's keep an eye on 3,430 and 3,425, because breaking through this level could bring prices back up to retest 3,490. On the upside, of course, let's first monitor the central area around 3,450, and then obviously the upper part, but I would rule out this area here, so I would refocus on 3,465 to 3,470 as the area to break through on the upside. The SPX, of course, is in a very similar situation, even though on Friday it still stayed above. Today we'll probably see a strong upward opening. We'll see at what level. It's currently trading at 6,060, so roughly we could open in the 6,500, 6,010 area if prices stay where they are, and we might see a test of the highs reached on Wednesday around 6,060, unless there are new developments or news on the war front. So let's keep an eye on this area. As for Bitcoin, which we're looking at now, it's recovered a bit. We've just broken out of this range this morning, and is working to challenge this high here, which is around 108, 105. So a break above 108.5 could push prices back up to the 110, 110.2 and 110.5 area. If this area fails to break, prices could easily go back to test 105.5. Perfect. With this, we've reached the end of this weekly video analysis, in which I try to give you some guidance. Of course, if the scenarios I've hypothesized turn out to be particularly wrong, or if there are significant movements that affect this analysis, we will obviously make a new one and update everything we've said so far. Before you go, like the video, follow me on social media, and we'll see you soon. Thank you for your attention, and don't forget to like if you enjoyed it.